Welcome back to FinTalk, brought to you by VERMEG. Here we discuss pressing topics in fintech, regtech, covering regulatory, collateral and digital across banking and insurance and finance. VERMEG has been proud to deliver innovative software solutions in the industry with stability and cost efficiency for a global roster of clients. With over 20 years of trusted transformation in finance and insurance, we're bringing industry's top expertise to FinTalk. I'm Gerald Akhtar and I'll be your host for this podcast. So welcome. Today is a new series of podcasts around COLLINE and collateral management. With me, I'm delighted to have Wassel. Wassel, hand over to you to introduce yourself.
Thank you, Jawad. So, Wassel Dammak, I'm heading the collateral solution product strategy at VERMEG. I've been working in the software edition space for the last more than 20 years, focusing on product management and leads and revenue generation and how to bring the technology to the finance world to meet the client requirements.
Brilliant. Thank you for that, Wassel. So we're going to talk about quite a lot of topics around collateral management, optimization, all the stuff that's new, that's upcoming, roadmaps, horizon scanning to a degree. So we'll go through and there'll be a lot of information. So to start, I think the key point is a lot around collateral optimization and the wider usage of such features. I know you've been doing a lot of work around that, and especially with our existing clients. It'd be great to hear from your input around this area.
Yeah, sure. When it comes to collateral optimization, I think this topic is one of the hottest topics this year and for the next years. Why is that? Because now that the regulations are more or less behind us, the latest one is being UMR Wave 6 in September this year. Now there's a focus again on automation and efficiency. And I think that collateral optimization is an enabler for this efficiency. How is that? The fact that you automate the allocations of assets, how you pledge your assets in the collateral world, so you don't have to rely on a human being to select what is the optimal collateral to pledge. So you automate that. And second, you are able to meet certain objectives of the optimization world, meaning that there is the cheapest to deliver. How do I deliver the less liquid assets to meet my Basel liquidity requirement, etc.? How do I keep certain assets for my buffers and for my trading activities, etc.? So you have multiple objectives within the collateral optimization. But I think that most of the banks and the buy-side clients, when they look to collateral optimization, they have to prepare the ground more so that you can hit your objectives. Meaning that when you do collateralization, the first thing you need to think about is, of course, how do I centralize my inventory, both cash and securities assets and crypto assets now. So you need to think about having that transparency across your inventory so that you know what inventory to use for your optimization and how to move it quickly as well. So this is the first thing that you need to prepare. You need to prepare the foundation, let's say, of the collateralization optimization runs. Then you have to think about all the constraints regarding optimization. So you have legal constraints like all the eligibility schedules, all the management of the concentration limits, the haircuts, etc., etc. And then you need to have a quite extensive and comprehensive matrices so that when you optimize, you have to take all that into consideration. You don't only take into consideration let's say the legal aspects, but also the operational aspects of that. So all the inputs for the collateral optimization algo, like the cost of the assets, like the different other criteria that are sometimes related to each bank separately, the cost of opportunities of usage of those assets, etc. So all that needs to be taken care of besides the legal. So you have also the operational and the business constraints. And then you have the algo. Generally speaking, we use in COLLINE the holistic view simplex algo that will look to all the demands of the collateral coming from different desks, different obligations. And then we allocate all that using the best optimal assets according to the the inputs parameters or the constraints that we have put in the algo. So the algorithm will propose things, will propose movements, will propose substitutions, will always try to bring back a collateral if it's not still optimal, because the parameters of judging the optimization have changed. And then based on that, we can either automate the process by generating the bookings within COLLINE, or we can send those to another external collateral or settlement system if the COLLINE optimizer is used on a standalone basis. So collateral optimization, we have to think about it as an enabler for efficiency, but it is also a service to different clients, especially for all the collateral servicers, the fund admins and the investor servicers, generally speaking. All those entities, they would like to offer collateral optimization as the usage of the instruments, the assets, the non-cash assets are more and more frequent now with the UMR phases, etc. So there is a room to offer collateral optimization as a service to the buy-side clients. And I think that here the algorithm will be maybe a little bit simpler, but it makes sense to explore how we can help there for those types of institutions so that they can enrich the catalog of services. So for all those reasons, collateral optimizations is, I think, a hot topic, and there will be a big focus on this topic, and it will go from tier ones to asset servicers to tier twos, etc. So it's really a general topic across the industry.
Thank you for that, Wassel. I know you're doing a lot of work around that in your COLLINE platform. We have an optimizer module in there as well. I want to kind of push forward onto the efficiencies, the collateral processes, EMP. Your thoughts on that and around that, and how best firms of varying sizes and varying asset classes can kind of manage that.
Yeah, sure. I mean, the collateral optimizer, the COLLINE optimizer is one aspect of the efficiency equation, but even though there has been a lot of investment within the industry on automating the messaging around the margin call, there is still room to improve certain processes, and there is still a big portion of the, especially the buy-side community, still using emails within the messaging of the, collateral margining. And that's why we onboarded within COLLINE a digital component called email processor. Some people call it email extractor, that will extract the email from your inbox, will read that email. There is no need to have a pre-formatted email. It will rely on keywords, and it will rely on certain capabilities for machine learning and AI capabilities. And it will try to understand what is the ask behind that email. It could be a margin call. It could be an answer to a margin call. It could be a interest reconciliation related to collateral management. It could be a reconciliation file, etc. And then it will call the API in COLLINE that is responsible of that process. So you don't have to have, again, users look into the emails with all the operational risk behind that of answering an old email, of fat fingers, whatever, risk you have there. But it will automate the process, and then you will have immediately the actions done in COLLINE. So the bookings are already created in COLLINE, so it will automate the processes, and it will help the users to have a four eyes on what has been done. So we expect that the clients, the first day they will use this component, digital component, they will look to what the process looks like, and they will try to validate the bookings before they are sent to the counterparties, for example. But once the SCP goes higher, and once there is more trust in the tool, so we think that the process can be automated from end to end, and bookings can be sent automatically to the counterparties without even thanks to, of course, to the workflow rules, but it could be further pushed in terms of automation levels. I think this email processor is there to, of course, to complement the picture, but as you can understand, the email processor can be used within the collateral space, but I think it's a digital component in VERMEG that could be used on a wider scope, especially on the operations. And whenever you are facing a client in terms of services, we know that clients may rely on emails in many cases for the services, for the financial services, and that email processor could be a light component that is sitting on the top of your infra, talking through APIs to the different components of your infrastructure, and then it could automate the processes as much as possible. Of course, here we are using that within the collateral space, but we think that this can be expanded to other, operations departments.
Yeah, I'd agree to that. And I'll just add to that, the email processor element of it is a digital offering, part of VERMEG's digital toolkit, right? It's not just, I know we're talking about it in aspects of collateral management, but actually, like you mentioned, it's a wider offering. It's not, limited to margin calls, for example. The offering that we built it out for that's in COLLINE is purely down to the element of not missing out on those margin calls that, you get, operations get thousands of emails, right? But just to make sure that, you're picking up and this tool nicely complements the system.
Absolutely.
And to kind of add to that, the future tech. So in your eyes, I know you're working a lot on this, and this is one of many digital enhancements and things like that. So if I say horizon scanning to a degree on the future tech, what are you currently working on? What's your ideas that you've got that you can share with us?
Yeah. I think that there has been for the last 12 years a lot of investments in the collateral space, mainly driven by regulations. A lot of investments around the connectivity through native APIs, the cloud as well. All those things that have been pushed by the regulations, but then by the efficiency and how to make things more automated, etc., etc. So this is, I think today, this is what helped the industry to navigate the COVID crisis when there were high peaks of volatilities and high volumes of margin calls, etc. Yeah. Those things helped to the industry to navigate that and to overcome that. And I think it is quite robust today in terms of overall infrastructure. But now, if we think about what are the next things, if you ask questions, how can I have instant margin call settlements? How can I have instant view on my inventory? How can I have instant view on my liquidity? Those challenges could be overcome by the users of certain technologies like DLT. DLT can help there, for example. If you look about, we talked about the email processor, and if you have an intelligent component that will understand the margin, the emails through artificial intelligence or machine learning or etc., these are things that could help as well to go further in the process and to automate further the process and to reduce the cost. All those things could help in the future. We don't have to put the technology in front of the problem. You need first to see what is the problem. And then let's see what is the technology that can help to solve that problem. Yeah. Of course, the solution maybe will be a combination between existing technology and the future technology as well. There is no one recipient for that. But of course, we think that there will be more and more changes in the future. And we think that the seeking more efficiency and seeking more automation and seeking more real-time aspects and connectivity will be a big driver to consume those solutions and to apply them in the collateral space.